world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by Francesco Simoneschi. Francesco is the co-founder and CEO of TrueLayer, an open banking API platform. Since open banking went live early last year, progress has been slow and reviews have been mixed. At the same time, companies like Plaid and Quovo in the US and Tink and Bud in Europe have raised 8- and 9-figure rounds to scale platforms to support the innovations open banking promises. TrueLayer is squarely in the mix of leading open banking API platforms, quickly rolling out functionality, and seeking full coverage of Europe by the end of the year. If you enjoyed today's episode, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Francesco Simoneschi. Francesco Simoneschi, welcome to Rebank.
Hello. Hi, everybody. Thanks for having me here today.
Yeah, so thanks to you, the founder of TrueLayer, an open banking play, API connectivity platform, which I'll let you introduce and maybe describe in more detail. But a bit of context, quick intro to you and your background, how you come to all this.
Sure. So my personal journey is very much a journey into technology and entrepreneurship. I started quite early in my life as an entrepreneur, always building B2B2C companies. The very first one, it was into the domain names market. It was the early 2000s. Then I moved into big data. Then I went on working for more venture capital opportunities, and then now here TrueLayer. And I think like the trade union here is very much how do you access and leverage a technology platform that facilitate data transformation and exchange between multiple parties, and that's what really have been doing for a little while now. As it comes to TrueLayer, we'll describe TrueLayer as a secure conduit for connecting application to the bank infrastructure, to the open banking infrastructure in this very specific context. And when I say application, I really mean a large spectrum of application, like from not just the financial industry, but I would include marketplaces, I would include e-commerce, I would include business application and utilities, really like a large spectrum of what you can build on top of banks as an aggregated platform.
So, okay, maybe to open up to make some of that a bit more tangible, because we've covered open banking on the podcast in the past. We've had the likes of Starling, Bud, Banked, Louise Beaumont of the Open Banking Implementation Entity. It's been probably a few months since we've really dug in. So one of the things I want to update on is just kind of the state of play, how things are evolving, who's doing what, how open and active various players seem to be. But to kind of make things a bit more tangible for listeners, I mean, can you name any of your clients and talk about any of the kind of tangible use cases that you guys are delivering or in the process of building?
Absolutely. I think you're totally right. Like most of the narrative has been quite abstract when it comes to open banking. Like everybody are citing incredible transformation, and then you have to look at the use cases. And at TrueLayer, we have been doing that since the very, very beginning. And I guess we try to divide things in three large buckets. One is identity. So how do you leverage the existing bank account that you have to prove your identity? That can happen in various forms. It can be during the KYC process. It can be to validate the identity associated with your bank account. As an example, we have couple of PFM application then rounds up your balance, and they actually use our API to validate the ownership of the bank account and the identity of the bank account before submitting that account for direct debit. That, of course, does two things. One is reduces the risk to actually onboard any source of malicious user or fraud. And the second one is to give a better, I would say, also experience into linking up your account, because you don't actually need to remember any sorts of source code, account number, and all the operation is completely streamlined and secure. That's one good use case. This use case, I think, is also very valuable for any kind of marketplace dynamic. You will see in the next few months a few marketplaces using our technology to actually validate the identity of their sellers or validate the identity of their driver, for instance.
So this is marketplace, anything from like Airbnb to eBay to, I guess, Uber, something like that in the case of drivers?
Yeah, absolutely. It can be any source of like two-sided marketplace this can work also for consumers. Of course, I would say that the friction required to sign up a consumer to share their bank account identity is probably higher than a business. A business wants to transact on the marketplace. They see the opportunity as a revenue generating opportunity in that extent. And so everything that can actually streamline the onboarding process is seen as a kind of short-term time to value. And so on the marketplace point of view, then you look at what is the cost of figuring out KYC, AML requirements, and just like the business operation required to onboard new customers on the marketplace. If I can streamline even just like a portion of those manual checks with something that is digital, then I definitely happen to be in a way better position, and I can manage my risk way better in a more streamlined fashion. So this is a very tangible use case to me, to something that is often not really well articulated or extremely it's not yet part of the public knowledge of what open banking is useful for. Other use cases are around, and it's kind of like similar to marketplaces, but this time more for the lending industry. It's still like a risk use case to a certain extent. Try to leverage your bank account as a source of information for understanding whether you can afford a credit line or not. Right now, the majority of the user journey actually requires you to share a bank statement, whether it's in a paper form or more like a PDF. As you can imagine, there are two issues with that. One is that you have to go into a certain extent from a paper image version of your bank statement to a digital version. So all sorts of issues can happen there. It's very manual. On top of that, those bank statements can be forged. So there is an adverse selection, so to speak, where the users that or customers that shouldn't probably like have a loan, they are the ones who are mostly motivated to forge the statement itself. So when you establish a digital connection between the bank and the application and the lender in this case, then there's nothing really that can be forged or like any source of misinterpretation of kind. So everything happens in I would say in an environment that speeds up business efficiency for the lender, and also it's probably faster for the user in the end.
Mm-hmm. And I guess there's something important around just kind of data ownership and management too, right? The whole, structuring access, revoking access, limiting access to certain things. For instance, if it's, printing off a bank statement and taking it somewhere, well, it could be that there are just a few components of that which the lender in that case needs. It could be that there's no sense in that entire document sitting around in physical form, where it could be compromised or it could be, breached in some form, where, a kind of single-use view or access analysis on data can be done quickly, and then tokens revoked. maybe that kind of lending example isn't the best case, but you could think of some of these authentication journeys where it's really about kind of a one-time, single use confirmation, and then, data is data access is no longer granted. I'd be curious, and maybe this will be helpful for some of the listeners as well. There's a lot of kind of press interest in the space at the moment. There have been some big fundraisers recently. Bud raised around recently. There was a Scandinavian company, Tink, I think they're called, which sounds like an interesting concept, which also raised a pretty big round here in Europe. The Plaids and Quovos of the world, the Rebank, who we mentioned before. How do you think about the kind of broader landscape and various kind of opportunities that individual players are pursuing, and maybe what is unique about TrueLayer's vision?
Sure, absolutely. The broader landscape is heating up at the moment, and I think this is just like a derivative of a more mature industry trend into what is open banking, what is bank APIs, and definitely like you will see more and more companies in the space also like raising additional capital and go look at different opportunities around the world. I think open banking is kind of this new wave of innovation that is right now pretty much in Europe, but you see Mexico coming up with a similar regulation. Australia is going to be live in June.
Brazil too, right?
Brazil, Southeast Asia has some sort of variation around. So I think the story is not just over, actually. We're going to see probably in the next 3 to 5 years more and more companies kind of racing into the space, and it's going to be competitive, absolutely. So I think the companies that you just mentioned, and of course ourselves, will continue to compete in the space. And there's going to be, as the market will kind of double down in sorts of size and use cases are going to be more clear, you will probably see some sort of specialization into certain areas more than others. I'll make an example. Like we recently launched the payment capability of our API. So that means that you can read data, but you can actually move and transfer money. This is something that not all the platforms that you mentioned are doing at the moment. Some they do, some they don't. Some others will be more vertically oriented toward maybe banks and financial services, and maybe build use cases around lending and aspects that are more core to that segment. Some others will maybe get more into payments and maybe e-commerce eventually and so forth. So I think there's going to be some sort of use cases that are going to be more dominant in specific regions, and companies that are going to really think about how can I dominate a use case from a market perspective vertically, and find product market fit in there. I think this is already quite visible if you compare the reality of the US versus Europe. Companies that you mentioned, they look quite the same on the, like just looking at their website. Reality is that they managed to actually develop quite different products. One is very much into ACH authorization, which is something that doesn't exist in Europe, for instance, but in US is a big problem, and so it's almost like a payment company to a certain extent. The other one is more into leveraging data for insights and wealth management, and helping like kind of the mid market of the banks in the US.
So that's Plaid being the ACH type payments company, and Quovo being the more investment management.
Absolutely, and they recently merged. Right. So I guess now they will get both of the two words in like a single offering, which is great for companies in the US. So, but this is an example of how company, they can look very similar on just like looking at the marketing material to a certain extent, but then when you look deeper, what sorts of focus they had historically, then you find like pretty diverging markets and pretty diverging use cases. I think this is the same here in the UK. Sometimes like open banking as a or PSD2 as a sort of capability is often like the narrative is often along with other kind of business models, like marketplace banking is one. I think there are companies which are actually more into marketplace banking than open banking itself.
Like Bud, for instance.
Like Bud, for instance, where like they definitely have like their own focus. We definitely have our own focus, and on certain things we just overlap. But that's quite common in many different part of the industry.
Yeah. So you mentioned your payments capabilities, and I'm just kind of thinking through, you know, the types of experiences that can create. Because one of the, you know, kind of complaints early on is kind of, you know, everyone's imagining these amazingly kind of comprehensive, integrated experiences across banking and investments and, I don't know, savings and insurance, but actually the strict requirements around APIs are read access from, you know, a finite number of banks around a finite number of products. And to actually create some of those more comprehensive experiences, you need either one, kind of early adoption and kind of strategic adoption from people that aren't required to offer it, and two, some way of actually transferring funds between various parties. And it sounds like potentially the payment piece that you mentioned supports that. So I don't know if you have, you know, 2 or 3 bank accounts and a credit card and a robo-advisor or some sort of digital investments platform on the back end, and the banks are required to follow PSD2 open banking, and the other, say, fintechs are adopting it because they want to take it on the front foot. You could, via that payment initiation capability, move funds between, you know, in and out of the investments platform, credit card, and bank accounts.
Yeah, absolutely. I think like payments is a core aspect, if not the aspect of open banking. And I mean, access to data is great, and I think is a stepping stone to just build a number of propositions that otherwise like you couldn't even imagine to build. But payment is actually something that has the scale and probably the ubiquitous use case that you can find in many different parts of the industry, and that goes from financial industry all the way to e-commerce to many other payments. Digital payments are now permeating every single aspect of society, and the fact that now I would say the government, like whether it's the UK here or the European government, are trying to create a framework and an environment where companies can actually compete and have alternatives to credit cards and debit cards. I think is just great. And what are like the real capabilities of payment initiation right now are quite limited, to be extremely honest. The law requires banks to create what is called single immediate payment. So it is a single payment that you can make from your bank account to any other routable bank account across Europe. It definitely, it's quite exciting because you can build all those propositions you were mentioning. So maybe use payment initiation to buy some crypto assets or invest some money into like a financial app, or maybe even just at the point of sale to buy just service and goods. There are some missing functionalities, and I believe this is part of the broader opportunity that open banking should create for companies. And I think like 2-3 years from now, you will see that there are going to be some sort of basic interfaces, and there are going to be some commercial APIs on top that banks are actually actively monetizing. And this is definitely where like one of the ways where payment initiation can really flourish, by having the endorsement of banks and creating an active business model for them.
All right, so I want to dig into that a little bit. You said there are 2 or 3 kind of missing functionalities. Can you be more specific?
Yeah, absolutely. I think the holy grail is an experience where I connect my bank account once with an application. There is a set of permissions and grants that I'm actually giving them, and then it's done. I don't have to like rethink again about this authorization. The application can take money or send money to my bank account, as well as consuming data according to this initial contract that you establish with the bank. Right now, it's not exactly like this. You have to authorize explicitly with the bank every single payment that you make. That means that all the use cases where payments and funding is withdraw on a passive way, let's say something like direct debit does right now, or ACH in the US, then are a little bit tricky to do, because you actually need this source of explicit consent, explicit strong customer authentication from consumers to do. There are banks who are starting to create a little bit of a framework where a strong customer authentication can be avoided if certain risk data are passed through. But I think it's still very early days, and I'm sure that the banks will take a very careful look at whether or not enable those sorts of functionalities. And I think at the very basic level is how eventually we can just make money out of those interfaces, and definitely variable recurring payment as a alternative to single immediate payment sounds like a clear avenue where the banks can start charging and monetize the access.
Yeah. And what would that look like? You talk about these kind of commercial APIs, which banks are using to monetize. What might monetization look like around a specific?
Yeah, I think will follow very similarly maybe the playbook of telcos, where they started monetizing certain functionalities like phone calls and SMS through third-party companies that were exposing those capabilities through an API. So it's quite straightforward to see how the bank, for instance, can start selling and charging access to get full KYC data, or maybe your passport or identity document and so forth. Same thing with payments, charging risk fee associated to the transfer of funding.
And they would charge that
enhanced version.
And they would charge that to the receiver of the payments, probably.
Will charge to the application or the receiver, like whoever has this source of commercial contract with the bank. Yeah. And so and this can be sometimes not maybe just charging for a service, but it can be some sort of partnership model where for other products that the bank has, like an insurance or an investment, it can be like share revenue of some sort. So I think there are different models that you're gonna see in the market. Some of them are already there. Reality is that credit cards is already like a share revenue kind of model. There are some investment products that they work in a kind of similar fashion. So it's just the very early days, and open banking will create more and more a pressure toward establishing those frameworks in certain geographies. And I think there are companies like ourselves that are well positioned to become an hub for aggregating all those different opportunities.
Mm-hmm. I'd love to switch gears slightly because I think that was very insightful in terms of where we are and where we're going. You mentioned to me before we started recording that prior to founding TrueLayer, apart from some of the other kind of early stage, more entrepreneurial stuff and the venture capital stuff that you did, you also had some strategy roles. We're in such a unique place right now around open banking and the evolution, expectations around where things may go, what might happen sooner rather than later. How do you, as a founder and a manager, kind of work through this, and strategize through this uncertainty?
Yeah, I think like the first thing you have to do is to look at things by yourself. Like try to get to this decision point by having validated, having look at the data, whether it's a piece of regulation, whether it's just feedback from a bank, whether it's feedback from a potential customer. But you have to go through this process by yourself, because what I find is that I wouldn't say most of but a good majority of the of the press and articles and let's say expert opinion out there, they tend to be either wrong or extremely partial, or like they follow their very specific incentive to push. But it can be because like they want to push out a specific narrative, they want to continue to do, I don't know, screen scraping, or somebody they just want to use APIs. Like there are so many different specific point of view that you can try to advertise if you want. And so if you really want to have a clear view of what is likely to happen and what is bound to happen, then you have to look at things by yourself. You have to research, study, you have to speak with people and try to get some sort of small data to sort out your decision. From a larger strategic standpoint, I believe there's clearly right now a race toward coverage. I think if you look at the announcement of those recent round of funding, but also, I mean, ourselves as TrueLayer, we have been adding for recently Germany, and it's public knowledge that we want to cover Europe by the end of the year. So there's clearly this race toward the company that can provide the largest set of connectivity and coverage in a short period of time. I think it's very interesting to see what will happen in 2020 when this source of race to connectivity will be kind of over, and then companies will have to really think deeper about use cases and where the growth will come from.
In terms of, you talked about that kind of formulating your own views. It was not particularly easy to kind of read the European directive as it was being formulated and kind of come to your own conclusions about what the implications were, both in practical terms and kind of legal terms. To what extent, I don't know, did you engage outside resources, lawyers, in terms of figuring out what was possible, whether it was stated or unstated?
Absolutely. I think it is quite hard. I'll be honest. I think it's quite hard, and it's not just for ourselves, but that has been the case for banks, even for regulators. I think like even right now we are at less than 6 months away from the date of RTS, and I think the FCA here in the UK, they still have some interpretation to go through and some open question that they can really answer, or they will answer. But again, it's just try to interpret the upstream regulation from the European Union. That is the challenge, and we invested a significant amount of time and money and resources into try to navigate this source of interesting waters and interesting time. We have ourselves a small compliance and regulatory team. We are part of many different industry working group and association, and I've been really kind of surprised at the very beginning of how much companies are willing to share between each others about how to do some certain interpretation, what the regulator is thinking. Because it's also true that by the time you learn something, maybe a view from the EBA or from the FCA or such, then probably for you is already a little bit too late from a product build out perspective. And so you want to get to this kind of internal knowledge, inside knowledge, as soon as possible. And you have to invest time for doing that.
This TrueLayer isn't your first startup rodeo, as they say. You've done this before. What did you do differently in starting TrueLayer than maybe you did when you were 19 when you started your first company?
Yeah, I think about this quite often, and I try to compare different stages of life and how you do things. And sometimes it's just like a feeling. Sometimes it's like something more deeper, like a rational thought you can actually articulate. The stories are quite different. The first one that I did, it wasn't venture funded, and it took really a long time to develop into a full-fledged company, and just we as founder have the understanding and like the shared intent of actually building a company. I think like when we started back in the days with our very first company was really a project, was really almost like a game, like something that you do with friends, and then it happened to be a company. And it took us like a few years to just like understand that, and then to learn how to run a company. Just we weren't prepared at all, and that time I was in Italy, so there was very little I would say entrepreneurial culture, or just like reference or mentors that could like offer us any sorts of business advice of any kind. So it was very much do a lot of mistakes, try to come up with your own theory, and sometimes like even reinventing things that they are right now very common. So it was a very much a learning journey. With TrueLayer is a little bit more, everything is a little bit more streamlined. With venture capital money, you have this incredible tool of being able to invest in advance into something that will generate a substantial opportunity later on, which is a very powerful tool, but it takes a lot of also risk and a lot of kind of insights about your future to try to do it correctly. Otherwise, like you can just go mental and feel like you are on the right path, but you are not. So I think is in a way TrueLayer for me is a way more mature experience into an entrepreneurial journey, to try to build something that can turn out to be extremely big and valuable, more directed as an overall effort.
Mm-hmm. What advice would you have for fintech founders?
I think the advice is to try to have a clear strategic direction, but then try to be hyper tactical. I think like every week you should set yourself some sort of like growth target and some sort of metrics that you can benchmark against yourself or the industry, and try to get there in any possible way. I think this is the exercise, and maybe not just in fintech, but in general, this is this most important exercise that startup founders can do. Try to balance out what is the large grand vision that you have, and you of course pitch to investors, but also you have to be just hyper tactical and just try to understand where is my next 5% of growth coming from, and just rinse and repeat every single week. In fintech, I think collaboration and understanding distribution is key, because most of the business models are actually quite validated, not just by the startup culture, but in general, like stuff like lending or insurance or investments, like are proven business models. The whole innovation happens to be around the distribution channel, whether you have a great user experience or you use some sort of new or innovative way to reach out to consumers to create a new engagement mechanic, and that's where you should focus on very much.
To wrap up, I'd be curious to get your thoughts on kind of the high level question around open banking, maybe from a bank's perspective. And I guess it's a combination of, is open banking good or bad for banks, and what should banks be doing right now?
I think it's hard to answer this question. I think different banks, they have different incentives, and it really depends on their kind of market positioning, whether they are an incumbent or they are a challenger, what sorts of IT capabilities they currently have. I believe that for the majority of banks, this is a great opportunity to go after a larger market share, especially for the challenger banks. I would say like the mid market or some of the new like Monzo, Starling is a great opportunity for them. For the high street banks, then it's definitely like a challenging position. I hope that open banking can actually liberate product development for them. I can imagine how banks can leverage their existing brands to actually build applications that are completely decoupled by their core banking systems, and therefore can be evolved way faster, better, and sometimes go after even customers that are not necessarily banked with the same bank as before. So I can imagine how, I don't know, NatWest, which historically has been a UK kind of based brand, maybe go after some customers in new geography, because right now they can connect bank accounts of other banks, and so leverage this connection to offer high value services on top of that. On the other side, I think banks will play a very large role into creating a commercial framework for open banking, and this is probably the next evolution that you will see past the compliance process. So it will probably be 2020, where everything compliance is done. We delivered as an industry what we had to deliver, and now we can really think about what are the ripple effect from a commercial standpoint, how we can create and monetize the access to the bank infrastructure. And I think some of the banks are actually actively engaged with that. So I think overall is like you cannot really stop innovation. You cannot like really say like something can be done, but no, I'm just gonna resist and try to like build barriers. In a way and another, US is very much the example. Like companies and players, they always find a way to get to like the net effect of this innovation. So I think at the end of the day is like banks should just try to embrace that and try to understand, okay, like maybe we are losing something here, but we can gain so much in other areas and focus on that.
Fascinating. Well, I think TrueLayer is lucky to have a strategist as a founder, given how rapidly the space is evolving and how unclear kind of the precise details of the future are at this point. It'd be interesting to stay in touch and watch things evolve together. Francesco Simoneschi, thank you very much for joining us today.
Thank you so much.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.